All right, welcome, fams. Good evening. What I want to share tonight, I've already told us, has to do with fair value gap and imbalances. It's the same thing. Fair value gap and imbalances, or IPA, fair value gap, different names you give to them, but it's a smart money play, and it's very important we look at it. I told us in our previous courses that smart money play majorly, we have mitigation candle, institutional candle, fair value gap, liquidity. These are smart money play. And what I mean by smart money play is that there is a belief that there are people that moves the market. These guys have volumes in the market, and their concept is what we are studying. Because anytime they want to buy, they buy at certain levels, they sell at certain levels. So these are the things we look at in our mentorship team. We try to find out what are the footprints of smart money and how can we trade with them? How can we go in the same trend, the same way they are going? If they are buying, we want to be buying. If they are selling, we also want to be selling. So we have looked at institutional candle, where I said institutional candle is simply smart money Q, where you see either a bearish candle in between a bullish momentum. So that bearish candle does not really clear liquidity, but that bearish candle is liquidity itself, because enough volume was pumped into the market at that candle to take price to the opposite direction. So in order to induce retail traders like you and myself, then take price to the bullish momentum. Then for the sell, we have price selling. All of a sudden, you see one bullish candle standing on its own. In future, price will need to come back to mitigate out of the orders that were placed in that candle. I gave us some examples that day, like what you can see here. If you go to the weekly now, this may not appear like this, but watch, this is 4 hours. What can you find? There is a cube. This was a high, this was the low. Market gave us this cube. You can see that cube was created. So let me remove this now. See, this cube was created. So this cube was created to induce retail traders. You see, market is clearly bullish. Then they pushed price to this level, and then followed by about 4 candles to push price away. So this candle is a trap. What the market, the market came back to that candle. So if I wanted to trade this candle, I'd have just taken the 50% of this candle and wait for price to come there. That was the 50% of the candle. Price came there. Price will always respect them because they are smart money candles. They are institutional candles. Price came back into it, and then price rallied away. But if you're also somebody who was on chart and you watch how price played, you see how price came back into that candle, gave us our move. This is our formation. We want to see price break structure at that candle. Yes, we know that this candle price is going to buy because it will come to close their orders here, but we still want to wait for our formation. So price came to it. If I had played 50%, I'll be activated on this trade, and then my stop loss at the week, 13 pips, price will give me a good 1 to, yeah, maybe 1 to 6. And if you had waited for a break of structure at this level, you will get more than that 1 to 6. So whichever way you want to look at it, smart money plays will always hold price. We always hold price. So This thing I want to talk about imbalances, IPA, fair value gaps. Now, by way of definition, let me say what is an imbalance. An imbalance is simply insufficient price action in the market. Because for every bullish candle, you find in the market, there should be a wick to both sides. So it tells you that there are both buyers and sellers in this candle. For every bullish candle you find in the market, there ought to be a wick to both sides. So you see this candle is bullish, and then you see this candle, another candle forms here is bullish. Then another candle forms here. Why this one is a sell candle. So this candle have a wick to this downside. It has a wick to the upside. Then this candle has a wick to the downside, and it has a wick to the upside too. This is the concept of imbalances or fair value gap. So if you look at these candles, they all have wicks to both sides. That's wick, because that's the typical formation. You see all candles, wick to the downside, wick to the upside, wick to the downside, wick to the upside. But you will find out in some cases that this candle here and this candle and this wick, these two wicks are not touching themselves. These two wicks are supposed to touch themselves. So it means that there is a fair value gap in this candle. So this is a fair value gap or an imbalance or IPA, insufficient price action. So this wick is supposed to come here to close, but now the wick got to this place and didn't close this other wick. So this is what we refer to as fair value gap. So by way of definition, I'll define imbalance as a gap in price action which indicates insufficiency. Imbalance is a gap in price action which indicates insufficiency in the market. All right. I think this will be fair. Yeah, that will be fair. So how do we now trade these imbalances? Anytime you have these imbalances, price will always, it will only take time. Price will either come to close the imbalance. Sorry about that. Price will either come to close the imbalance, or sometimes price can come to the 50% of the imbalance and trade away. Most times price comes to the 50% of the imbalance and trade away, not the open, either 50% or they will close the imbalance completely. So this is an imbalance or a fair value gap or IPA. It means the same thing for a buy. This is an IPA for a buy. We'll go to the chart and then I'll show you. This is an IPA for a buy. IPA for a sell is the same thing. Price comes, while price is selling down, price buys up and returns back down. So price will need to come to 50% of that insufficiency or the imbalance, and then price will continue its bearish momentum. So that's the concept of imbalance. It's not something difficult, it's something we've been seeing, but most of us have not taken time to look at it. But imbalances most at times, please take note, imbalances most at times on the higher time frame, price will just play 50%. But on smaller time frame, most at times, price will come and cover the imbalance. I'll give you examples too. So let's go back to set index that we're analyzing. Okay, let me just start from where we are currently. I'll remove this now so that it will be clear. All right, we see that price gave us this high, price gave this high, price gave this low, price gave higher high, traded into 50% of this, tapped into the 50%, and price gapped away. Nearly price gapped away, creating this high. You can identify that there was an imbalance here. Yes, there was an imbalance here. Let me try to zoom it out. Look at this week and this week, they are not touching. They are not touching each other. Look at that week and this week. So this is, I use the gang. All right, look at it. See that imbalance? So I'm expecting that price will definitely come back to close it. And that was what price did. Price came back with this long candle. Yes, price wants to buy because you see that after price came close that long candle, price gave you a heavy candle that closed, signaling that the buy momentum is higher. That was why this candle closed above this. Those that Sunday candlestick pattern, this is what we call bullish engulfing. So anytime you see a bullish engulfing for what we're trading candlestick pattern, what are you expecting? You expect that price will trade back into the candle. So price closed above, traded back into the candle, and price gave almost a 1 to 4. Yeah, but why did these long candles, these consecutive bearish candles, why did they come down? They came to close out of this imbalance, created this double bottom, because price still want to come down and take this as liquidity. Double bottom, we know that double bottom is liquidity. So they created that. You can see how price came back, took it as liquidity. So for those that know, we know that in smart money traders, we know that price will come back here Sunday to clear this double bottom. And that would have given us the open of the daily candle that was here. So price can close this imbalance and rally the way. After price rallied the way, there was no significant imbalance here. When price came here, let's watch. When price came to this place, gave us this high, lower low, and price broke structure. What can you identify? There was an imbalance here. So you know that price is going to come back there. I said most times on lower time frame, price will close it permanently, trade into the other block. Then on higher time frame like daily, weekly, price can just come to the 50%. I think I gave us an example with this Euro USD. Yeah, when I was talking about the 6 months time frame, 12 months, yeah, I think 12 months. All right, let's look at the 12 months time frame. Let's see. I gave us that example then. I think I've cleared my chart. All right, no, it's still there. I didn't clear it. It's still there. All right, let's go. We know that price was bullish from here. What did you do? See, price created high, low, and price gave us a higher high. So this became our top range. This was now our top range. This was the down range. So from this level, we know that price will trade back into this place. You can see that imbalance that was there. That was where price came into. So let me draw that imbalance. And see the imbalance. That week, to this week. That was where price came into. What can you find? Price came to the 50% of that imbalance. Price came to the 50% of the imbalance. You can see that 50%. That's where price came. Price couldn't close it completely, but price came to the 50% of it. And then price gave us another high. So this becomes our new trading range. A new high has been formed, and this becomes our new higher low. This became the new higher low. So what can you find? Price came back to this imbalance. This candle is the candle that created this push up. So it means that enough volume was on this candle, because this candle becomes our mitigation candle. That was our mitigation candle. Like the whole candle was our mitigation candle. So if I pick this, but there was an imbalance here, price needed to come back to fill it. Price came back and filled it beautifully, completely, tapped into the order block. So this is what we call an imbalance. Price trading to cover where there is insufficiency or a gap in the market. That's imbalance. If I go to the daily time frame, you're going to see a break of structure at each of this level. You see a break of structure there that tells you that the buy has been confirmed. So that is what we call imbalances, fair value gap, or insufficient price action. Let's go back to the chart. Now, what can you find as price gave us this high? You can see imbalances littered here, everywhere. I'll remove this. You see imbalance here, you see imbalance here. What it simply means is that price will definitely come back here. It's just a matter of time. It's not a matter of whether price will come here. Price will definitely come back into this zone. It's a matter of when. Price will definitely come there. So it's just for you to patiently wait for price to return back to this zone, and then you look for this same formation, this same break of structure to the upside, and play the retest. I would like to go to, let me go to VIX 25. How many persons are on the call? Okay, 4 persons. If you are getting value from what I'm sharing, or you understand, let me have a 1-1 in the chat section so that I can know how to continue. If you're getting value, let me have a 1-1 in the chat session. If you are getting what I'm sharing, a 1-1 in the chat session. Only 1 person has dropped that. All right, 2 people. Okay. All right, let me go to VIX 25. Let me show you all something. 25. 25 used to be my very good asset, but I left it for a very long time. But I took a trade on it recently, so I want to just share with us. This is 4 hours. Okay. Now, we know that price is bullish. I know price is bullish. I'll tell us why. But let me just come to this place. As price was bearish here, you can see price gave us high, low, and then price broke structure. Price gave us this. I want to go to a 1-minute chart in this place. Let's find out what happened here when price came here. Just this place. If I can get the 1-minute chart, I'll be so happy. Let's see. Let's find out what happened here. 1-minute chart. Let's see. To have that. It's going to be a long history. I just hope that we can get that information. If we can, it will be beautiful. Whoa, couldn't get it this far. All right, let's use 3 minutes. Let's try 3 minutes. Let's try 3 minutes. Let's see. Can't get 3 minutes, we'll try 5 minutes. All right. We got 5 minutes. We got 3 minutes rather. All right, let's see. 3 minutes, let's see. You can see how price was, look at the momentum, why price was going up. A low, higher low. Sorry, higher high, higher low. Price goes a higher high, price goes a higher low, price gives us a lower low, a lower high, price goes a lower low, price broke structure, and now came into that 4 hours point of interest. Price came, gave us this, price gave us all of this break of structure, and price retreat. So we're looking at taking an entry here. Price blew through. When price blew through, now this is what you are supposed to do. Immediately price blew through, the next thing you are expected to do is to zoom your attention in this angle. Now this is your liquidity sweep. Liquidity sweep. That's liquidity sweep. Price has taken liquidity. So the next thing you are expecting is that price should break. Once price breaks, so long price has come to your point of interest. Not anywhere, your point of interest. Now you zoom out, you begin to watch. You want to wait for any other break of structure, and then you will take it. So look at what price was giving us: a high, a low, a high. Price came, broke this structure, and price came and swept another liquidity. Let's follow it gradually. That's why you can take multiple entries, you get stopped out, and you enter again because you know what you are doing. Price swept another liquidity, and price came here and gave you that break of structure you have been expecting. That's the break of structure that you have been hustling for. You have gotten like 2 stop loss hits now. You tried the first entry, it didn't play out. Yes, the first entry at this zone, it didn't play out. Price broke this structure. You were looking to play this fair value gap. Price blew through. Now, price is really, really in the box. Look at what price did. Price gave us that clear break of structure. You can see that. And then there is the candle that took liquidity and led to the break of structure. That last candle, this is the mitigation candle. That last candle, price will come to play the open or 50%. So this was the candle. You just draw your line on the candle. Let me use this on the open of the candle. This was the open of the candle. So you have your trade, your sell position on the open. And that was how that trade was played. This is 3 minutes. I'm saying 3 minutes. My network got interrupted. Let's go. All right, so price came into that mitigation candle, and the first move, price gave you a 1 to 7. First move, 1 to 7. Now I'm going to, let me leave that. Now let's say you miss this first move. The next thing to look for, you are going to be looking for imbalances. Because there's the mitigation candle is this one that already took liquidity. The next entry may not take liquidity. So where is your imbalances that was spotted? Look at imbalances on this candle. This would have been areas for entry. But price didn't come there. You see, that was another area of entry. Price didn't trade into that place. What can you find here? There was another imbalance here. There was another imbalance at this zone. That was the one price respected. Price traded into this imbalance. Price traded into this imbalance and price traded away. Price traded into this imbalance Price traded away. Immediately price traded away, price broke this low because you are trading structure. Remember, price is now bearish. Look at it. A lower high, a lower low, a lower high. You know your entry will be at the lower high. So you are waiting for imbalances to get in. There's an imbalance spotted here. I saw an imbalance here. I'll wait for price here. I'll tell you why price didn't play all these imbalances. I'll tell you. So price came back, price didn't touch that imbalance, and price rallied away. Now, you keep following the trade. Price started going up, and price came, cleared all of this liquidity. You can see all this liquidity, all these weeks cleared by price. And then price broke down. We are still trading structure. Look at how price broke this low. So the next thing you are looking for is imbalance. You must still get one. Did you see how price came back to that imbalance from this week to this week? That was another entry because we are still trading structure. It's still structure. This is now a low. This is a lower high. So we now go for a lower low. So price came, enter here. When price gave you this low, price gapped back into this imbalance. Price needed to come back to this imbalance. You can see that. That's how you keep using imbalances as a reason to continue to add positions. Add positions. Price traded away. After price traded away for a long time, price came back to this place, swept it. There was still imbalances remaining above. After price gave you all of this long move, this is more than a 1 to only God knows, I don't know. Then price came, swept it, and price gave you a lower high. You know, we are going to be heading for a lower low. So you start watching out for another play. If price will present another opportunity, what are you waiting for? Liquidity sweep, imbalance. What can you find? Price gave you a break of structure here. Look at a break of structure. Price traded into that last candle. And that was the entry. Price came down and price moved. When price came, price closed above this structural level. Price needed to trade back. Price traded back into this last candle because you can see how this candle cleared all these other highs. You can see that. So it's just to keep adding positions. You are following structure. You had your entry here, and then you start targeting the lows. You know, we are going for a lower low, and that was how price left. As price came here, this is 3 minutes. Price gave you this break. You can see this break, all of this break. Price came, cleared them, and price started going down. Since we are going for a lower low. After this low that created that high, price needs to give you another lower low, which is lower. Price gave a lower low. When price retraced, price is going to go up. So you just keep adding positions. Now, let me tell you the trade I caught today and how I caught the trade on this 25. Let me tell you that. Let me show us. Okay. Let me show us the trade I caught and how I caught that trade. All right. I dropped this analysis. I know price has broken this structure. Look at the structural point. This structural point has been broken. So this is my break of structure on the daily. And I know that price is going to keep buying. So you can see how that price gave you this, all of this wick, and this candle cleared them. So what were we looking at? We are looking at price to come back to this candle, and then we'll buy. But remember, this was where the break of structure is to the top side. So here becomes this was the break of structure. So this was the candle that cleared structure. So they just came and tapped the open. This is daily. They don't need to retrace so deep. Yes, there's imbalance here, but price only came to the open of the candle that broke structure. This was the move that broke structure. This was the entire move, because on weekly, this is going to be just one candle that pushed down and broke structure. So this was the candle, they came here. And then let me look at this imbalance. Look at the imbalance. This was the imbalance beginning from here up to this place. What can you see? Price came to the 50% of the imbalance. Remember, that's why I told you, if it's on a bigger time frame, price can come to the 50%, reaccumulate or distribute and go the next direction. So you want to wait for that price to return to that imbalance and see what price will do. You don't just enter. This is daily. The stop loss is going to be wide. So once price come here, here's what you want to wait for. Wait for that break of structure, a retest, and then you get in. You need to see this one all the time. Once you see this break of structure, then you can now play this entry as price is coming back. Now I'm going to go to the 1 hour. This is daily. Our time frame for trading daily is the 1 hour. So let's go to the 1 hour. Let's find out what happened here when price came to the imbalance. And that was why many persons missed this trade. We were waiting at the mitigation candle, but I saw the play on 1 hour. Look at 1 hour. Permit me to remove all of this. Let me remove all of this. Okay, price has come to the 50% of the imbalance. What am I expecting? A break of structure. Now watch. Let me zoom this out. The price gave you a high. Price gave you a low. Price gave you a high. Price didn't close below. So this was still below and price broke this place. So that was my break of structure. So immediately I saw that this break of structure, I know that if price should come back, I'm going to buy. Now, where was price going to come to? Imbalance. You see that imbalance? That imbalance gives me extra confirmation that price will certainly come back. But price will come to close that imbalance. So I was waiting on that imbalance, price will come. So on that imbalance, price gave us a sweet break of structure. This was the break of structure. Price broke this high. If you go to like 15 minutes, let's say 15 minutes. Price broke this high, left imbalance below, and that was where I was targeting. Price broke that high. Let's see. Okay, if you can go to 15 minutes. 15 minutes. Okay. All right. Price has come, giving us that break of structure. And then this was the rate test on the imbalance. This was the imbalance. Now price came. Look at it. Price broke this structure on 15 minutes. Immediately I saw price broke this structure. I was looking for any imbalance below here. And I can see one tiny imbalance here. I can see imbalance here. So I had all of them marked out. If price comes to any of the imbalance, I'm going to play. So first imbalance, price came in there. So first imbalance, price came in there. I played this first imbalance and I took partials. Coming, first imbalance was played and price gave a very huge margin. Stop loss was at this low. Price gave a 1 to 3.5. Then I saw price coming back. When I saw price coming back, I knew that price wants to come and do danger. I was here on this entry. I was here on this entry. Then price came back. When price came back, price turned this, my former entry, towards liquidity and swept it. So I knew that the second imbalance can be a possibility. If price comes there, I'll play. Price didn't get to that imbalance, but I'm just looking for my formation, my model. I was waiting for a break of structure. Look at what price did. Price broke structure. That was the break of structure. Immediately I saw this break of structure, I called my friend. I told him, all right, let me show us. Okay, let me put this here first. Let me see. If I later shared it here, I think I did, maybe. Okay, I think I shared it in the general group. Yeah, I shared it in the general group. But let's see. I shared it with our resource persons. I said, look at what Price just did. Price just gave a 5 minutes break of structure so we can look to enter. Okay, look at it. 1 hour. I was waiting for this liquidity to be swept. See that break of structure here. So I was waiting for this liquidity to be swept. That's the break of structure. So I was waiting for this liquidity to be swept. And that was what Price did. This was the double bottom I saw. I knew this was liquidity. I knew. So I had my entry on that liquidity. That if Price sweep this liquidity, I'm going to get in on the trade. I just played the liquidity sweep. Price should sweep it and tap me in. And that's exactly what happened. Price swept it, and I was looking to take profit here. I held my trade to this point, and that's a 1 to 3.9. I held my trade to this point. That was it. That liquidity sweep is what I played. Look at when Price came back to it. Look at that 5 minutes entry. You can see that was the liquidity. Well, immediately that place was broken, I played this imbalance on 5 minutes. Look at it. Immediately this was broken, I played imbalance on 5 minutes. Let's go to 5 minutes. Let's see. There's an imbalance I played on 5 minutes. Price didn't tap me in. Okay, look at it. So I exhausted everything. Let me remove this so that you can see. I exhausted everything. Can you see that break of structure? That was the break of structure. Market has this candle closed above, this candle closed above. So what did I see below here? There was an imbalance. That's where I had my first entry. So I played, this was the imbalance from here down to this place. I didn't play 50% of it, I played the close of it. Look at it, I played the close of the imbalance. Instead of play 50%, I just played the close. I hope you can see this. I played the close of the imbalance. The close. That was the break, the close. And that was how I was not activated. If I played the 50%, I would have been activated. But I played this, Price didn't touch me, and Price left. Immediately this candle closed above here, I played this week. I knew Price was coming back. And that was my second entry, as you can see. Okay, I played this candle while this candle moved. And that was how I got in on that trade. And Price gave a beautiful, if I played 50%, that was it. I've had it here, stop loss at this low, and then I'll be targeting the top.